If last week's stock market drop had you drinking your weekend margaritas a little bit earlier than usual, you're not alone. Because a lot of people were like, the stock market dropped because the jobs report was too good? Yes, too good. The U.S. economy added 172,000 new jobs in May, more than double what was expected. Unemployment stayed at 4.3% and wages continued to rise, but mostly for those who don't really need it. Normally these are good things, right? More people working, more jobs, higher wages. But Wall Street looked at these reports and thought, oh hell no, get the good tequila. And why is that? Well, because much of the stock market gains over the last year has been predicated on one major assumption, that the Federal Reserve was going to eventually give Donald Trump the rate cut that Jerome Powell wouldn't. Not once, but maybe even twice this year. Lower rates would mean cheaper borrowing, easier refinancing, more corporate spending, and higher stock valuations. Basically, the stock market was betting on cheaper money, but a good jobs report changes that whole story. A strong labor market and rising wages means that inflation stays sticky. And if inflation stays sticky, the Fed has less of a reason to cut interest rates. Now, a majority of Queer Money newsletter subscribers think that the new federal chair, Kevin Warsh, will be the yes man that Donald Trump wants, but the fundamentals do not support a rate cut at all. Which means all that outstanding debt, corporate debt, credit card debt, mortgage debt, government debt, isn't going to get cheaper anytime soon. In fact, if inflation continues to stick around like that one creepy ex who still likes your Instagram stories, borrowing could get a whole lot more expensive. So the market dropped, not because more jobs is a bad thing, though a deeper look under the hood suggests that the jobs that were added, many of them were seasonal, part-time, and hourly, and not necessarily the optimal jobs that pay great. But investors were really pricing in future cheaper money. And Friday's report suggests that future is a lot less likely. What does it suggest? Well, we're not collapsing. We're more squeezed like a good tush. And the Fed is stuck between a rock and a hard place, between protecting the economy, fighting inflation, and trying to avoid Trump having a meltdown the next time he wakes up from a nap. What a mess, as my glamazon friend Chris used to say. So what should you do next? Click below for more.